Most traders only watch price. I watch something else alongside it, open interest. Once you know how to combine the two, price action stops being noise. You start seeing conviction or the lack of it behind every move. That's what this video is about. Quick disclaimer before we go, everything here is educational only, not investment advice. I'm not SEBI registered. Full disclaimer in the description. Now let's get into it. Open interest is the total number of option or futures contracts that are currently open, meaning they haven't been squared off or expired yet. Every time a new buyer and a new seller create a contract between them, open interest goes up by one. When either side closes out, open interest goes down. It's a live count of active market commitments, not historical, not settled, outstanding right now. That number tells you something price alone never can, whether this market is attracting new participants or just shuffling existing ones around. People confuse open interest with volume all the time. Volume tells you how many contracts traded during the day. It resets to zero every morning. Open interest tells you how many contracts still exist. It carries forward. Think of volume as daily footfall in a shop. Open interest is how many people are still inside. You can have high volume and falling OI. That just means a lot of people are exiting. High volume and rising OI. New people are piling in. Both matter. They tell different parts of the story. Here's the critical insight. Price tells you what happened. OI tells you whether to trust it. If a stock rallies 5% and OI is collapsing, that's short sellers covering. The rally isn't fresh buying, it's forced exits, and it can reverse fast. But if that same 5% rally comes with OI building strongly, that's new money entering the trade. That's conviction. Same price action, completely different story depending on what OI is doing alongside it. There are exactly four combinations of price and OI direction. Each one tells a distinct story about who's in control and how convicted they are. I use these four quadrants as a filter before tagging any trade idea. Let me walk you through each one. Quadrant 1. Price up, OI up. This is long build up. New buyers are actively entering the market. Fresh money is flowing in, supporting the move. This is the highest conviction bullish signal of the four. The move isn't borrowed, it's being funded by new participants who believe in the direction. When I see long build up in a stock that's already in my top ranked sector with a clean technical setup, that's when I'm most comfortable sizing up. The OI is telling me the market agrees with the trade. Quadrant 2. Price up, OI down. This is short covering. Existing short sellers are exiting their positions. Their buying pressure is pushing price up. Here's the problem. This isn't new bullish conviction. It's bears retreating. Once the covering is done, the buying stops. Short covering moves can be sharp and fast, but they're low conviction for a bull trade. The fuel is finite. Once shorts are cleared, there's nothing underneath. I tag these as speculative at best and I keep size small. Quadrant 3. Price down, OI up. Short build up. New sellers are actively entering and pushing prices lower. This is the mirror image of long build up. High conviction, but on the bear side. When I see short build up in a sector that's already breaking down, with the trend clearly against the stock, this confirms the move has teeth. Not just profit taking, new participants actively betting on further decline. Quadrant 4. Price down, OI down. Long unwinding. Existing long holders are closing out their positions. That selling is pushing price down. But here's the key. These are not new bears entering. No fresh short positions are being built. The selling pressure is finite, limited to whatever longs still need to close. Once those positions are squared off, the pressure stops. That's what separates long unwinding from short buildup. Same falling price on the chart, but OI tells you there's no new conviction behind it. I treat it as a weaker signal and I wait for confirmation before acting on it. How do you actually read this in real time? In Zerodha Kite, open the option chain for any stock or index. You'll see OI data for each strike alongside the price. Compare today's OI with yesterday. Is it rising or falling? Cross that with price movement and you have your quadrant. For futures, it's even cleaner. One OI number for the whole contract. I do this check every afternoon around 3 p.m. before deciding whether a setup has enough conviction to enter. 5 minutes of reading OI can save you from chasing a bad move. There are two traps I see traders fall into repeatedly. Trap 1. Treating short covering as a bullish signal. The price is going up, it feels bullish. But OI falling tells you it's bears exiting, not bulls entering. Don't chase it. Trap 2. Ignoring OI because it feels complicated. You don't need to track every strike, just the aggregate OI trend for the stock and the specific strike you're trading. Rising OI confirms your directional view. Falling OI questions it. That's 80% of what you need to use this tool effectively. This is exactly how I score conviction before allocating capital. Long build up in a top ranked sector with a clean setup, that's high conviction. I'll deploy a meaningful position. Short covering with no sector momentum behind it, medium or speculative. Smaller size, tighter stop. Long unwinding with no new shorts building, I might skip entirely and wait for a clearer signal. The conviction tag controls position size. It makes the decision objective, not emotional. OI is one of the key inputs that gets me there. That's the 4 quadrant OI framework I use on every single trade idea. Price plus OI together give you a much cleaner read on whether a move has real conviction behind it. If you want to see how this plays out on actual trades, real entries, real P&L, that's exactly what this channel documents. Subscribe and follow along. See you in the next one.